Hi everyone, welcome back to my channel. In this video, I will be discussing chart patterns. I'll first start by defining what the patterns are. I'll then discuss the most popular chart patterns. Then I'll explain the ways in which to identify key price levels, and I'll follow up with breaking down how to effectively enter and exit trades. Lastly, I'll demonstrate how chart patterns are visible on highly traded stocks such as SPX and Tesla. To start, let's define what chart patterns are. Chart patterns are the foundation of technical analysis. These patterns display the motion of supply and demand for price movements. Because these patterns repeat themselves quite frequently, it becomes relatively easy to pinpoint the anticipated direction after identifying historical trends. So, what are the different types of chart patterns? The three primary types are continuations, reversals, and bilateral or neutral patterns. Now let's take a look at a few examples to review these types to learn their movements. On the screen, you can see that I've pulled up 8 different chart patterns. So I'll go ahead and start by discussing the double bottom. Now, this is entitled the double bottom because we see these two chart levels here and here signify that there has been a level of support that has been respected. So, in order to trade this effectively, it's important to note that this is a reversal pattern. This particular example shows that the start of the stock is falling. It touches on this support level here. It rises up to touch on resistance, and then it falls back down to touch on that same level of support. It then rises up to break resistance, and then touches it once again, and then continues on an uptrend. Now, this also is going to be similarly true for the inverted head and shoulders, which you see here. This starts on a downtrend, touches support, rises up, touches on that level of resistance. Then, of course, it falls down, and then it breaks that level of support all the way down to this drastic motion of the head. Then it rises up, kind of does the same thing but in the opposite motion. So this is going to be the head here at this touch point. This is going to be the left shoulder, and this is the right shoulder. This is why they're calling it the inverted head and shoulders. Now with the bullish channel and the bearish channel, I typically steer clear of trading for these just because these particular patterns don't offer a whole ton of profit for me, just because the consolidation level is kind of neutral, and I just don't find high returns on these particular patterns. Now, with the bull flag and the bear flag, I will say that these are going to be continuation patterns. So the good thing to note about these two is that if it's in an uptrend, it will remain that way. And if it's in a downtrend, it will also remain that way. So whether or not there's a ton of consolidation isn't a huge deal as long as you know the correct entry and exit points. Now coming down here to the double top and the head and shoulders, these are going to be reversal patterns as well. And they're simply going to be the opposite of the double bottom and the opposite of the inverted head and shoulders. So this particular stock is going to go ahead and start in an uptrend and do the exact same thing, but again, it's going to be the opposite way, okay? So keep that in mind when you're looking at trades. Now I'll go ahead and show you a few more patterns so that you guys can see why these are so popular. Moving on to these particular 8 chart patterns, I want to go ahead and start with the bullish rectangle and the bearish rectangle. Now for me personally, I can admit that I don't particularly trade with the bullish and bearish rectangles simply because these patterns are very bilateral. As you guys can see, like the stock is up and down with the motion. For me personally, I don't see a whole ton of returns, meaning I don't see a good amount of profits because the stock is pretty much competing on what will be the overcoming factor of either supply or demand, meaning people are fighting to see if they're going to sell or if they're going to buy, and it just results in not a huge return for me. So I kind of steer clear of these two. Now with the bullish pennant and the bearish pennant, I will say that I've been able to earn at least 40 to 50% returns easily just based on the drastic rise and fall of the stock, and that's pretty much after a break after the retest. And we see that here. So you guys can see this level is on a diagonal, and then of course this price level as far as charting it is on a diagonal as well. Once it breaks from this level of resistance, it usually has a drastic run to the top, and that for me again is going to be a high profitable trade just because again this is a continuation pattern to know. Now within this bullish triangle and the bearish triangle, I kind of also steer clear of this at times. It just depends on if I have enough indicators that are saying it's a good trade to make. But you can see again, this is kind of consolidated. It's that bilateral trading that you see going on here. And with that, again, if it breaks, it breaks and you can make a huge ton of money. But if it doesn't, you're just kind of stuck in that middle zone, that kind of gray area. And it doesn't really benefit you to hop into a trade that's just going to kind of be in a neutral zone. Following that, we see the bullish wedge and we see the bearish wedge, which again is very similar to the triangles. And you guys can see these are going to be charted on diagonal motions, okay? And that's based on understanding exactly how the stock is performing and understanding that, again, that supply and demand zone. So with that being said, we're going to go ahead and jump right into some actual charts so you guys can see this charted and you guys can understand how this plays out in real life. Okay, so what you see on the screen now is going to be a replication of an actual trade based on the fact that I've given you examples of what it would look like if you were to actually place these trades in real life. But no worries, towards the end of the video, I'll have SPX pulled up so you guys can see it actually in Thinkorswim. But let's go ahead and start with the double bottom example. So we see here that it started, of course, in the downtrend at that 422.50. Then it, of course, dropped all the way down to the 415. It rose up to about 418.50, then dropped right back down to that 415 level, which again is that second clue that this could potentially be a double bottom. Now we would have to continue to monitor the stock to make sure. So once it reaches that second level of 415, we see that it rose up. Of course, it broke this level of resistance at the 418.50 level, continued to rise. Then, of course, it fell back down and it touched on that level once again for resistance. Then it rose back up. Now, for me, I would enter this trade at the 419 mark just because I've gotten all the confirmation I would need plus other indicators to let me know that this would be a high probability trade. With that being said, I would take my profits at the 421.50 mark just because I wouldn't want to risk losing what I've gained, because we know this can obviously be changed and, things can happen with the stock market very rapidly. If you are trying to place a trade like this, I would suggest making sure that you have a stop loss. For me personally, I would put mine at about the 416.50 range, just because I wouldn't want to get stopped out if the trade doesn't work in my favor. Now, when we look at the inverted head and shoulders, again, following the same kind of pattern, I would go ahead and hop into this particular trade at the 420 mark, and then I would take my profits at the 422 mark, making sure that I have a stop loss just in case it doesn't play in my favor at the 417 mark. So following that example, I of course want to talk about the double top and the head and shoulders so that you guys can see the reversal pattern, obviously moving in the opposite direction based upon what I just said. So we know here that it must start in an uptrend for it to be a double top. Of course, it rises all the way up to about, again, that 218.50 mark. Then, of course, dropping down a little bit beneath 215. And then, of course, rising back up. It's going to respect that level of resistance until it falls back down and breaks that level of support all the way down to about the 213 mark. Now, by then, I would pretty much know that this would be a double top. Just based on if I were watching this live happen, I would know that this would be a double top. Then I would, of course, wait for that confirmation on whether I should enter this trade by seeing that it's going to go ahead and respect this level of support. And about the 214.50 mark is where I would enter this trade for a play for puts. And I would pretty much just ride it all the way down to 212. Okay, so that's how I would do this reversal pattern for the double top. Now with the head and shoulders, again, same thing. It's kind of repetitive, so I won't go over it in a lot of detail. But I would enter this particular trade at about the 213.50 mark and then take my profits again at about 212, just because that would make the most sense for what we know this would do. Again, this is the actual head and shoulders, so we see the head is actually here at the top, the left shoulder would be here, the right shoulder is here. Okay, so these patterns are very, very repetitive on the stock market. You guys will see this quite often if you pretty much just study the charts and understand that technical analysis. Everything will make sense. So I'm going to go ahead and jump right into SPX so you guys can see that. Okay, so you can see I have SPX pulled up here on the chart. I'm going to go ahead and drop it down to the 1 minute just for example purposes. Then I'm going to zoom it in just a little bit so you guys can see. And I'll start to chart for price levels. And again, this just helps you to identify patterns. But because I've been doing this a while, I can tell you guys, like for example, this 49.80, these two candlesticks here and then these two candlesticks here are going to be confirmation that this is a double bottom. And then I also see it for the 49.73, this candlestick here and that candlestick here are going to confirm it. And then I'm just going to chart for other levels. Not going to do a whole ton of charting in this video just because I've done that prior and you guys pretty much know what to expect for charting. I will say that the double bottom chart pattern, from my experience, is one of the most profitable patterns, especially when trading on 0 DTE options. And then also the inverted head and shoulders pattern. I like to use that one as well, but I always make sure that my 9-day EMA and my 21 EMA, those indicators need to confirm any presumed entry point that I would have. And then as far as like a double top, I know this is probably the most popular and most noticeable pattern for those seeking to make a play for puts. It's just easier to catch the sell down and of course double top patterns because they consistently show the same results when the volume is high and the setup is pretty precise. So with that being said, again, I showed you guys this 49.73 and then of course this 49.80. These are going to show us again what it is what? A reversal. We saw that this is what happened. The stock pretty much was consolidated and then it reversed and broke for a play up. Same thing here. Double bottom, made that reversal and made a play up. So that's going to do it for this video. If you guys have any questions, please feel free to leave them in the comment section below. Thank you so much for watching, and I will see you in my next video.